The people who have this money and are doing private lending are looking for return on time. They're looking to make a great interest rate, and they're not looking to do a lot of work. When you're not clear and concise on your timelines and your projections and what you're doing, it makes the lender a little bit uncertain about how serious you're taking borrowing their money. We need to know the hard costs, the soft costs, and what you have in the deal. Your job as the private borrower is to find the deals that support the private money in the first place.
What is up, YouTube? Matt McKeever here, and in today's video we catch up with Kyle Ford and discuss a common issue that both Kyle and I see with a lot of newer real estate investors when they try and transition into private financing. Now, just give you a quick perspective, Kyle's actually done over $10 million in private financing, so he really knows what he's talking about when it comes to the subject matter. If you didn't know, Kyle's also a mortgage agent as well. So again, he's a real estate investor that's constantly raising money privately, but he also helps investors raise money privately as a mortgage agent. So in today's video, we're going to discuss the common pitfalls we see new investors make when it comes to trying to attract private financing. And the biggest one is focusing on the wrong numbers. So in today's video, you're going to find out what numbers to focus on.
What is up, YouTube? Matt McKeever here, back with Kyle Ford. Hey, Kyle, how's it going?
Doing well, Matt. Thanks for having me again.
Awesome. I'm really excited for today's video where we're going to be talking about private financing, knowing your numbers, but making sure that you actually know the right numbers as well. So this is a problem that Kyle and myself see all the time. And just to give you guys perspective, Kyle is an amazing investor, and we've also shown some of his amazing projects on my channel, but he's also a mortgage agent. At this point in time, safe to say that you financed, over $10 million in private deals and private financing?
Absolutely. Absolutely.
Okay.
Well over 10.
Okay, so let's talk about, how did those people get their deals financed? And why do so many people struggle to get their deals financed when dealing with private financiers?
Right. So I always preach on people, you need to know your numbers, but not just the numbers that are important to you and your profitability, but you could be asking someone for hundreds of thousands of millions of dollars of their hard-earned money. You need to know what their numbers are. What's their break-even point? How long are you going to have their money for? What's the worst-case scenario in a downturn in the economy? And how much drop can your property take in value if something were to happen? In terms of timelines, way too vague. We need to be clear and concise. When somebody's cutting a check for hundreds of thousands of dollars, they want to know when their money's coming back, the timeline, the construction, the refinance. We need a clear outline timeline. Far too often I just hear 6 months. Okay, well, do you have the permits yet? Well, no, we're going to get that after closing. So you don't have your permits, you don't have the development plans, you don't have that, and you're saying 6 months. What if it's longer? Well, it shouldn't be. So we really need to get tight on these numbers, timelines, and understanding that the people who are cutting this check are expecting, they want to know their numbers, not just your numbers.
Yeah, and so what does that normally look like, Kyle? Like, are we talking about a 50-page report? Are we talking about a single page? What does that look like, and any tips and tricks for investors on how to know what numbers to focus on?
That's an amazing point. The number of 50-page reports I get is amazing, and it's all about their profitability. The lender is looking for a snapshot. The people who have this money and are doing private lending are looking for return on time. They're looking to make a great interest rate, and they're not looking to do a lot of work. They, for the most part, do not want to do your 50-page deal analysis. They want a clear, concise snapshot on one page on what the project is, and it's great. It's very important that you have that stuff in the back end if somebody's a little bit more analytical and they want to read through it. But myself as the agent, and as we're taking this for more than one lender, we need to be able to do a clear snapshot. So timeline, how much money do you need? What's your break-even point? So if you have to sell this property and maybe you have real estate commissions, you have land transfer costs, what is your break-even point on the property so the lender can assess their security on your after repair value? The one thing that I'm seeing a lot specifically is around private money, people are applying a cash flow calculation to a private money acquisition. The way I do these, and I know Matt, we've talked about this before, Matt, is the first year is not a cash flow calculation for me. The first year is a total build-out cost. Then the second year, when my building is stabilized, that's where I'm running the cash flow calculation. A lot of people are coming and saying, well, the property doesn't cash flow with private money. It might not for the first year. You need to build that into your costs and have it cash flow in your second year when the private money is refinanced.
Mm-hmm. Yeah, 100% agree. So when we're looking at kind of doing that one-page summary report, let's really talk about the sort of detail we should be getting into. So timelines. So if I'm looking at doing like a 6-month flip project, how detailed should I be breaking that out? Am I showing like 1 week to do the demolition, 3 weeks to do the initial renovation? What would you like to see?
So the four questions I always want to know the answer. How much do you need? How long do you need it for? What's the exit strategy? And what's the security? Those are my 4 big questions. In terms of the detail of the timeline, simple. It doesn't need to be we're laying flooring on this day, trim on this day, paint on this day. It's total construction time is going to be 90 days. It built into that 90 days, maybe just a small section, 2-week contingency, expecting 75 days, 2-week contingency. So now an investor goes, okay, so they're planning a 90-day renovation. They actually think it's going to be 75. They built in a little bit of timeline. Now, one thing that I like to articulate to investors is what's the refinance timeline? If anyone's gone through a refinance lately, they don't happen overnight. These things, 45 days is not uncommon to see on a refinance right now. Lenders are very backed up. Refinances aren't taking priority. Purchases are. So do you have your renovation timeline built out? Do you have your refinance timeline built out? If you're not refinancing, if you're flipping for a profit, you should have some type of data to indicate what the average days on market in that area are going to be, and make sure that your renovation and that data align to your term. So if your renovation's 90 days and the days on market is 90 days and you're requesting a 6-month term, that's reasonable. But if the days on market in that area are 180 days, it's a 6-month market, and your timelines aren't going to add up, and that's going to create uncertainty for a lender not sure that you understand what you're doing and you're taking their money seriously. And I think that's very important. When you're not clear and concise on your timelines and your projections and what you're doing, it makes the lender a little bit uncertain about how serious you're taking borrowing their money.
Okay, so we've discussed kind of the timeline pretty well there. Let's talk about the how much. So do I literally just need to say, hey, I need $100,000, or do I need to explain where that money's going and how it's being used?
Certainly an explanation. Once again, not looking for, the screws for the drywall are $80. Like, we don't need to know that. We need to know the hard costs, the soft costs, and what you have in the deal. So it's okay if you don't have any money in the deal. If you buy a property for $100,000 and it appraises at $140,000 right away, lenders will lend on the $100,000. It's okay if you're not putting a down payment. Just don't be sneaky about it. And I'm seeing a lot more of that. People are trying to hide the fact that they're not putting money in the deal. Let's use that as a sales point. Look at the great work you've done on this deal, that you've been acquiring properties under market value. I'd rather you tell me that up front so I can use that to tell my lender, hey, look, Matt's an excellent wholesaler. He works really hard at finding good deals off market. So that's why he's not putting any money down on this deal. He's using his cash for renovations. Or if you're going to be using secondary financing for renovations later, just tell them. Don't let if you're a professional investor who is using private money, it's okay if you're doing these things. You just need to be telling your lender what's going on so they understand, so they don't hear something later that spooks them.
Yeah, that's a great point. So then let's talk about security. So how should I really explain that? Am I saying, I'm going to put this much down on it, or this is the loan to value? Should I list like the potential other properties I can cross collateralize on? Like, how much information are you giving, and do you just try and throw everything out there?
Do you want to get control of your financial life? Do you want to crush it in real estate with wholesaling? Do you want to join my full-time team of wholesalers like Mike? Or Shahir? Or what about Tyler? Or Diego? Or what about Amar? All right, and what do we do, boys?
We make offers, we buy fast, never gonna miss a deal cause we pay cash. Offers, 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 deals, deals, deals. Tell us, Mr. Seller, what price do you feel? Cause we're Southwestern's biggest source of deals. Boom!
So if you guys want to crush it with wholesaling, you need to join my team. And down below, video description, there's all the links you need.
Yeah, that's a great point. So then let's talk about security. So how should I really explain that? Am I saying, you know, I'm going to put this much down on it, or this is the loan to value? Should I list like the potential other properties I can cross collateralize on? Like, how much information are you giving, and do you just try and throw everything out there?
So it depends. Certainly, we do cross collateralizations, and when we're doing that, we look at a portfolio loan to value. So if the subject property is $100,000, and you have another property that has $100,000 in equity into it, and you need $150,000 to do your deal, you're at 75% portfolio loan to value. So that's how I would show that. So that's also loan to value on the purchase price, but also tell me what your loan to value is on your after repair value. So if that's 75% loan to value on the purchase price, but you're going to invest another 50 into it, and you're projecting it to be worth 200. Now we're closer to, I can't do that quickly, but maybe 50% loan to value. So be clear and concise about what you're buying, what you're adding to it, what the purchase loan to value is, as well as what the after repair loan to value is.
Yeah, I think that's fantastic. And then, so when we're talking about the actual after repair value that we're evaluating this as, do I need to include like a couple addresses and what they sold for, or how do you like to present that information?
Yeah, generally I like to see three properties listed, and then going back to, if you have that 50-page report, you can have all the MLS details and all that stuff in there. On the one-page snapshot that you want to show to your lender, 3 property address listed with the sold prices, MLS numbers referenced. If that's that's something that your broker can look at, or a realtor can help you provide that data. That, as long as you have the supporting documentation and it's true and accurate, these are sold comps, you don't need to provide all that data. It'll be your lender's responsibility in the due diligence to just double check that if they're uncertain or they think your comps are a little bit wonky.
Okay, I feel like this has actually been a pretty good little summary of what to do when it comes to private financing, kind of how to approach our private financers. Any other general tips or mistakes you see people make? For example, does it take longer with private financers than normally with a regular bank? Is it faster?
I guess in terms of it's definitely it's certainly faster. I know in my business, I don't acquire anything with a conventional bank mortgage anymore. It's too slow. It takes too long. I want to be focusing on making money on the buy, getting properties under market value that I can increase the lift to refinance on the back end, the classic BRRRR model. So that's certainly in terms of everything I acquire is with private capital now. In terms of, sorry, what was the second question you asked there?
Just if there's any other tips or any other common pitfalls you see investors make, especially for newer investors when they're approaching a private lender.
Yeah. So don't bombard your private lender with every deal you're looking at. Once again, these private lenders are looking for a return on time. They don't want to go through your due diligence on every deal you're looking at. As an investor who's borrowing private capital, what you're doing is you're providing the deal that works. I looked at 50, and if you want to talk to me about all the deals I didn't do, I'm happy to do that. But this is the deal that works for the money, and this is what I'm showing you. So certainly start by building the relationship with a private lender, telling them what you're looking to do, what the model you're looking at, the price ranges you're looking at, so they can get a feel of whether there's going to be a good fit or not. But if you show your private lender everything that you get under contract that falls apart, you're going to kind of exhaust them. And and from a broker perspective, it's very frustrating raising capital for deals that don't happen.
Yes.
So you don't want to burn your broker out looking for deals for you or looking for money for you, that deals that aren't happening. So by all means, don't stop the due diligence. Keep working hard. Keep going. You need to do lots of deals. You need to go through lots of deals to get the good ones. But make sure you're being selective on what you're showing your private lender, that this deal's actually going to be happening. Otherwise, they're going to think that the two parts that happen, if you show them too much, if you give people too many options, they'll take them. So if you're showing them too much and you have a deal you really want to do, and they might say, well, I'll just wait for the next one. Right? So be clear and concise. Show them. Yeah, I hope that helps.
Yeah. And one other point, just thinking about that as you were talking there, Kyle, a big mistake I see a lot of new investors make when it comes to private lenders, they start building that relationship before they need it, which is good. But then they literally want to run every deal by the private lender before even offering on the property, before even having a contract. And based upon my experience with private lenders, most of them will perceive that as you wasting their time rather than you trying to be helpful or sharing info that they need. Realistically, if you don't have a purchase and sale agreement that's signed by you and the seller, we don't really have anything to lend on yet, right?
100%, Matt. And it's you're going to wear them out. You will. There's too many choices, too many options. Your job as the private borrower is to find the deals that support the private money in the first place. So you need to go through a lot of bad deals to get to the good ones. So don't waste the lender's time going through the bad deals. Get the good ones. Get it ready. I got to be careful from a compliance perspective on this stuff. But when personally, I'll use my personal example, is generally when I have a deal that I'm using private money on, I'm firm by the time I show anybody. I'm so confident in my numbers, my deal, the exit strategy, and that I know that there's enough value in here that I'm going to be able to get the capital. I'm firm on purchase, closing within 30 days by the time I even show this to my people, because they know I'm serious. They know that if I'm asking you for the money, and they start moving the money around, they start talking to the lawyer or their accountant to make sure everything works on their end, that I'm actually going to borrow this money. The deal's not going to fall apart at that point. So very true, Matt. Very well said.
Yeah, appreciate that. And appreciate you sharing your personal experiences as well. And I guess just building upon that, for the people that maybe hear the word firm and immediately start to panic, I think the other thing we can really take away from Kyle's example here is that for most deals, there's going to be a sequence of processes. And so oftentimes we need to do some of the other due diligence before looping in our private lender. So for example, with larger multifamilies or even just during COVID-19 right now, sometimes people don't want to show you their property until you've got an accepted offer. And so realistically, even once you get that accepted offer, if you haven't walked through the property, again, you're probably wasting your private lender's time. You likely should focus on some of those dominoes first in your due diligence period, then loop in the financer, rather than simply trying to bring in the financer from day one, especially if we haven't even walked through the property. And so one tip I would give to the audience that I've personally used is, especially when we're buying bigger buildings, there's often going to be lots of different conditions and things going on in our Schedule A. Well, oftentimes what we'll look at doing is getting rid of a bunch of those. And then if we have to ask for a slight extension on the financing period, at least what we're going to do is remove a bunch of the other clauses, or we're going to waive a bunch of the clauses we already had in there. So again, there's a way that we can make sure that we're moving towards that finish line without necessarily having to bring in the private financer from day one.
Yep, absolutely. Nothing to add there. Couldn't agree more.
Awesome. Well, I really appreciate this conversation, Kyle, just about private financing. Now, the one thing that I know people are going to immediately start hitting me up on is there any way that you could share like an example one pager? Is there some sort of template or mock-up, or could you just maybe docs out any relevant information on one? Because I know for a lot of my audience, when they're looking at a blank canvas, it's extremely intimidating. The moment they see any sort of example, they kind of go wild and they're like, oh, okay, like I get it. It actually is just a one pager.
Well, I'll tell you what I'm going to do. What I do have for you. I do have what I send to my lenders. When I have a client come into me and are looking to borrow money,
Mm-hmm.
and I send that out to my lenders, I can send you a copy of what I use for that. It's simple. I generally got a picture of the property. Everybody loves a picture.
Yeah.
Closing date. How much do you need? How long do you need it for? What's the security? What's the exit strategy? And I generally like to put a couple other things. Like I mentioned RRSP and TFSA eligibility. It frees up more capital. As a borrower, it also creates a good conversation for you to be having with your private lender. Maybe they say, I only have $100,000 in cash to lend.
Mm-hmm.
But if your term sheet, it's a first mortgage and you have an appraisal, that's RRSP eligible. So they could actually be lending on RRSP. So you can create a conversation to find more capital from that person by indicating on that. So I'm happy to share my term sheet with my one-page opportunity sheet that I share with my lenders. So absolutely.
Awesome. Love it. Really appreciate that, Kyle. And if anyone wants to get in contact with you, what's the best way to do so?
I'll share you my email address. It's Kyle at Bremac Real Estate, BREMAC realestate.com. Please send me an email. I'm happy to help. I can't thank you enough for the support I get from the Cash Flow Tribe community and from your channel here, Matt. I will let you guys know that I do work on a team of people. So if you reach out to me for help on this, it'll likely be myself and another agent that'll assist you on this stuff, just to make sure that I can keep up with the amount of demand that's coming in from the community, because what you have here is really special, Matt. So
awesome. Really appreciate that. And we'll throw a link in the video description down below to everything Kyle's mentioned. Again, just really appreciate you sharing your experiences with us as an investor, and look forward to the days we can go back out on site and start shooting some walkthroughs of some cool 10-plexes or whatever else you've got in your sites in the near future.
I got some cool stuff coming down the pipeline, so can't wait to have you out. So
awesome.
Thanks again to Kyle Ford for taking the time to break down for us his perspective when it comes to raising money privately. If you've got more questions on the subject matter, jump in that comment section down below and hit us up. What questions do you have in regards to private financing? Are you currently struggling raising money for your real estate deals? And where are those roadblocks? Let us know in the comment section. In the next video we do with Kyle, we'll make sure to answer those questions. Otherwise, thanks for watching this video. Smash the like button if you enjoyed this video. Hit the subscribe button if you're new to my channel. I'll see you guys in the next video.